I'm James Turk. I'm a director of the Gold Money Foundation, and it's my pleasure to be here today with Markus Kerber, an attorney as well as a professor of finance and political economy at the Technische Institut Universität in Berlin. Markus, thank you for being with me here this morning.
Pleasure.
There are a number of things I want to talk to you about, but I'd first like to start with the developments of the euro in Germany and the court case that you brought to the German Constitutional Court. Can you provide us with a little bit of background information as to what you've been doing there?
Yes, when the bailouts have been voted in May and June 2010, I initiated a group of plaintiffs who were not willing to accept that the European Treaty is going to be violated, because we have in the European Treaty, so to speak, a normative pillar, which is the no bailout clause, which means that the European Monetary Union is the experiment of creating a monetary union, single currency between sovereign states, which presupposes that these sovereign states remain liable for their own debt. So the case of financial assistance to Greece was no longer covered by the treaty. The treaty gives only authorizations for emergency measures in case of natural catastrophes, whereas the Greek case was a case of self-made poor fiscal governments. Soon after that, we got the so-called euro crisis, with Mr. Trichet interpreting the markets as being dysfunctional and giving guidelines to the governments to create what he called a rescue or stabilization mechanism, which was decided overnight, 9th and 10th of May, without the heads of government being really aware of what happened. As a matter of fact, these bailout measures have not stabilized the market. They have not soothed the market, because the fundamental problems of the Eurozone have not been solved. And the fundamental problems of the Eurozone are, of course, the fiscal imbalances, the budgetary imbalances of Ireland, Portugal and Greece, but the underlying problems are the lack of competitiveness of these countries. Mm-hmm. So this was an ill-conceived concept to create a monetary union with so divergent economies. And as a matter of fact, apart from the initial years where the sweet poison of the euro created some bubble economies in Greece, Portugal and Ireland due to local factors, but sooner or later they recognized that they are not competitive enough to compete with the northern states. So we have, as a fundamental problem, the split in competitiveness between the northern states, generating a trade surplus. That is the case not only for Germany, but for Austria, for Finland, for the Netherlands. And the southern states, including France, with large trade deficits and balance of payment problem. So the fiscal measures, the measures of fiscal emergency in form of bailout funds, have not cured the problems of catching up with competitiveness. As all these countries, these problematic countries, cannot devaluate to buy time in order to reorganize their economies, there has to be a very harsh program of recession, which brings growth down. So, as a matter of fact, not only the problem which Greece tries to achieve within 2-3 years is a problem which can be achieved within a generation. Now trying to achieve it within 2 or 3 years brings the economy so much down that, as a matter of fact, as a result, tax revenue goes down. The Greek case is a special case because it's a combination of bad fiscal behavior and deficit spending. The Irish case is a case of a country of 4 million people being totally overbanked, where banks have led to operations and have attracted risk which they should have avoided. And Portugal is perhaps the most classical case of the fundamental problems of the Eurozone. It is the country which still didn't have that much of a competitive real economy, but now is imprisoned in the monetary costume of the euro. So they cannot devaluate, and the euro is simply too expensive for them. So I don't think it is possible for Portugal to become very, very competitive in a, say, not too distant future. So the consequence is you have not only enormous trade balance deficits and balance of payment deficits, you have fiscal and budgetary imbalances, which have now to be covered by subsidies. So the first fund was exposing Germany to a risk of 122 billion euros. This one, which is the beefed up fund with larger tools, allowing the fund to buy on the primary market, to be more a preventive fund. Germany is exposed to a risk of 211 billion euros. And at the time of concluding this in the German parliament, the Brussels oligarchy, Mr. Barroso, the head of the Commission, the head of the Eurogroup, Mr. Juncker, and of course our French friends argue for an enlarged fund. So they know it won't be enough. It won't be enough to save or to rescue neither Spain nor Italy, and it will not cure the fundamental problems of the Eurozone. We took the government to court for the financial assistance to Greece and for the first rescue umbrella, which had a limited risk, too much, but limited, or smaller compared to the one we have today. And the Constitutional Court said two things. They didn't consider the total fallout risk as a risk for the existence, for the financial existence of Germany. They didn't say where the limit is, but they said, well, overall, this would not make German public finance unsustainable, but there might be a limit of sustainability of accepting risk. So this borderline has still to be found in the court. And secondly, they said, for any bailout, for any specific bailout operation, you need prior consent of the budget committee of the German parliament. So those who triumphantly applauded yesterday's survival victory by Frau Merkel will please take into account that for any further bailout in the future, the German budgetary committee in the parliament has to deliberate on that, has to vote in favor of it. And without that deliberate positive vote, the representative and the board of governors of the European Financial Stability Facility cannot vote in favor. As Germany, as all the other nations has veto power, so the situation is blocked. We'll see whether this parliamentary procedure is going to be fully respected according to the letter and to the spirit of what the court said. But as a matter of fact, the jurisdiction only concerns the past. The new beefed up fund has not been judged by the court, and of course I feel extremely curious. I'm very curious to know what the court will say about a beefed up fund which increased German risk exposure from 122 billion to 211, because it's obvious that the tendency will be to beef it up again, because the fund would not have the means to rescue Italy or to come to the help of Spain. So apart from that, the discussion about the bailout fund absorbs the other problem of the Eurozone, which is the behavior of the European Central Bank. Whereas we have a discussion on the parliamentary procedure to vote in favor or against a bailout fund, which puts Germany on the way to fiscal union. Mr. Trichet's ECB, for more than 3 years by now, practices, as a matter of fact, qualitative and quantitative easing. In the financial crisis, they quite proudly said that they would give, first of all, to Greek banks all liquidity they need, accepting all collaterals they would hand in, and in particular, Greek government bonds. So they did as well with Ireland and Portugal. So we have created, so to speak, a special banking zone, including the banking sectors of these three ailing countries. They can refinance themselves at conditions the other banks cannot refinance themselves. This is totally in contradiction with the idea and the letter of the single market, where we have the rule, the fundamental rule of non-discrimination. how can it be justified that not only for a couple of months, but for years by now, ECB practices qualitative easing, creating different conditions of refinancing? This is not only a distortion of competition, which is fundamental as well, the common market, but it's a source of financial instability. So Mr. Trichet, against the opposition of the German members of the EC board, the Luxembourg member of the EC board, and the Dutch member of the EC board, has transformed ECB to a fiscal, an instrument of fiscal policy. And he has assumed the task of being the guardian of financial stability. The continuous policy of qualitative easing has created a discrimination within the European banking sector, within the banking sectors, the different banking sectors in the Eurozone. From May on, we had the phenomenon of the central bank for the first time innovating, pioneering, as they said, purchasing bonds on the secondary market, which, according to us, is a breach of Article 123 and a breach of Article 125 of the treaty, because the European Central Bank has no mandate to intervene on the market in these massive amounts. By now, they have purchased for an amount of about 160 billion. This is far beyond their boundaries. This is no longer open market policy. Open market policy serves as a sort of fine-tuning of monetary policy. The ECB conducts fiscal policy. They are out of bounds, and they have to be judged. And that's why we have taken legal action in the Court of Justice in Luxembourg, and we will see whether the Court of Luxembourg will be able and is willing to see that without jurisdiction in that case, ECB will be without any control. We began our plea in the writ by reminding a man for whom I have the profoundest respect. It is Lord Denning, Master of the Rolls, who in the 70s in Britain, towards the trade unions, said, "Be you ever so high, the law is above you. Be Mr. Trichet ever so high, the law is above him, and he deserves to get a ruling which limits the self-authorization, the self-empowerment of ECB as some sort of fiscal policy fire brigade man."
Understood. Is it likely that the court will take the case and rule on it, in your view?
Well, otherwise,
or is it too political and therefore they're going to sidestep it?
All constitutional complaints are very political. This is in the very nature of constitutional complaints. As long as a case is pending, and as long as I'm the attorney, I never make any comments on the court.
Okay.
Because I suppose as long as I haven't seen the verdict, the court is being totally impartial. So now we got a ruling from the Constitutional Court, and I give my criticism on that. Be it within or as long as the procedure is lasting, I commit myself to discretion. But of course, we do hope that the violations of the treaty, which nobody puts into question, even not the central bank, will be legally assessed. Why? Because otherwise, if they are not assessed, if they are not appreciated, there would be a precedent, because the European Central Bank, being a pillar of the European Monetary Union, could act in a way totally independent of law, no longer subject to the rules of the treaty. We fought for these treaty rules, Articles 123 to Article 126. We said our consent to the European Monetary Union is subject to the implementation of these rules. No monetary financing by the central bank, no bailout clause, no bailout of ailing countries. Now ECB acts to bail out countries, to help them, asking these countries to, or urging them to organize austerity measures. It's not the task of the central bank to urge governments to organize austerity packages. It is the task of the parliament and the government to come back to their senses and to negotiate that with the population. This is a democracy. The governments have a contract with the people. They don't have a contract with the European Central Bank. So we have a system in the European jurisdiction which presupposes so-called privileged plaintiffs, which is due to the fact that the great danger in the beginning years of the European Community was violation of the treaty by a member state. In that case, the Commission intervened and took the member country to the court. Or another member country found fault with the behavior of a neighbor, and they took them to court. So this is what we call the privileged plaintiffs. But today, we see that the member states of the Eurozone, the European Commission as the innate guardian of the integrity of the treaty, are a cartel, a conglomerate of institutional powers who, of course, have disputes between each other, but they are well united in the will never to take each other to court and to leave these normative pillars of the European Monetary Union in a legally undefined territory. So we would like to bring light to that legal territory, because all these rules serve nothing if they cannot be invoked by a citizen. So our trial, our action, our legal action is not only important for ECB, it is important to protect the European citizen against the violation of the treaty by European institutions.
Understood. Were there any remedies in the treaty when rules would be broken, that people would be removed from office or anything of that nature?
Yes, you can of course invoke breaches of the treaty if the breaches of the treaty committed by community institutions have a direct impact on your situation. So nobody knows for the time being what is a direct impact. But we interpret that in a very large way, because the jurisdiction which is at the origin of that interpretation goes back to the 60s and 70s, when the community had far less competences. With the Lisbon Treaty, there is a quantum leap of competences. And this quantum leap of more European competences must correspond to a stronger legal control by the citizens. I give you another comparison. Germans have very much fought for political independence of European Central Bank, because they believe very much in institutions like the cartel office or the insurance supervision or banking supervision, which are politically independent. That is to say, no government can give them instructions. No government could give the Bundesbank instructions to act in this or that way on interest rates. Political independence in a supranational organization such as the European Central Bank is of a totally different nature. Because, first of all, you have another public. So if Bundesbank had behaved like ECB, there would have been a public outcry, an outburst of anger. Just to remind you of the fact that in the 19th, the Minister of the Treasury, Mr. Weigel, a very simple-minded man, once said, well, we should better sell the gold reserves of the Bundesbank to fill the gap, the budgetary gap. There was an outburst of anger.
I remember
and
the outrage.
The Bundesbank was considered by the German population as a trust, as a fiduciary of their assets. Mm. So if a Minister of Finance acts badly, Bundesbank punished him. So there was a countervailing power. That countervailing power, this system of checks and balances between a national Ministry of Finance and a national central bank, is no longer there. And within the European Central Bank, Germany has as much voting power as Estland, as Cyprus, as Malta, which is ridiculous. Ridiculous. That's why, in any way, the European Central Bank is the great problem in the years ahead of us. It has to be reformed, and it will be reformed, otherwise Germany will leave the European Monetary Union. Look at these press conferences with the number 2 of ECB, Victor Constancio, considers himself as unfailable in his judgments. This is not the system of checks and balances we have accepted in 1992. And the Germans are very attached to sound, sane monetary policy, which in the long run keeps the currency stable.
Yeah, I mean, that's quite clear from the record of the Deutschmark, you know, from 1950 to 2000. If you compare the record of the Deutschmark to any other European currency, you know, the Deutschmark stood head and shoulders above all of the others in terms of preserving purchasing power. So the promise that had been made to the German people that the euro would be managed like the Deutschmark and that the ECB would be run like the Bundesbank, that was clearly broken.
That is clearly broken, and it becomes now extremely obvious after the resignation of my friend Dr. Stark, who resigned a little late, but not too late to give a wake-up call to the Germans. Letting them know that what happens in ECB is exactly the contrary of what he has fought for. Stark was the man in charge of creating the monetary union. He sold the idea, which was an experiment, to create a monetary union of sovereign states. You've never had that before, of states who wanted to remain sovereign. And he spent a lot of work on the persuasion of those in Germany who were reluctant to do so. Ottmar Issing, the first chief economist of the European Central Bank, is, I suppose at least, appalled by what is now happening. Mm-hmm. So the new president of the Bundesbank, Mr. Weidmann, a young and promising man, is now trying to find allies within European Central Bank, within the board, in order to get more support for the German stability culture of a monetary policy which has a main object, price stability, full stop, and not the saving or redemption of this or that country.
Mm-hmm. I guess similar to Mr. Stark's resignation was also Mr. Weber's resignation. That was a wake-up call too, wasn't it?
Yes, it was a wake-up call as well, but Weber has never really tried. He was a man apparently not willing to fight and to combat. Well, and he did this in order to show that he's no longer supported by the German government, that he's not willing to take over ECB, a claim which a German claim nobody could contest. So he did a lot of harm to the Germans, as a matter of fact. A man in his 50s must be able to face combat and has to stand up once there's an adverse decision. This was the behavior of a typical German academic who didn't want to go on the battlefield. You know, I'm a naval soldier. I would have taken things in a different way. I would have stood up again and to fight even more and more fiercely. That is a challenge. But Stark is a fighter. He has always been extremely vigorous and combative. But he could no longer accept that after Portugal, Greece and Ireland, under Trichet's presidency, which is a very autocratic presidency, the bank started even to take outright positions of Spanish and Italian bonds. So he stepped down, and everybody understood this is no longer the Bundesbank.
Right. I think the message had been quite clear already that, particularly with the Greek decision, that obviously they were going in a different direction than the Bundesbank had ever thought about, even conceived of going. The German government, though, are they representing the will of the people, or are they going off in a way to, you know, try to preserve the monetary union against the will of the German people? How do you see that?
Well, there is a growing split between public opinion and continuous bailout policy preached by the German government as without alternative.
There are always alternatives.
Yeah, I put that into inverted commas.
Okay.
So the German government is in what I could call, from an economist's point of view, in a prisoner dilemma. So Frau Merkel was at the very beginning of the Greek crisis tempted to say, well, let's kick the Greek out. Yeah, because otherwise there will be moral hazard.
It broke the rules, so kick it out.
And the Greek case is a case, well, if you let that go, you cannot refuse any other bailout to any other country, because it's a combination of cheating, deception, misgovernance. They used all the funds from the European Monetary Union for more than 30 years. This has not contributed to the competitiveness of Greece, but has made some rich people in Greece even richer. So today, those who have said, for what reason soever, at the beginning of the crisis, which was a small Greek crisis, it was a small cancer which we have, our position is no Eurozone country can go bankrupt. That was such a blunder of declaratory policy that you have the long-lasting effects today. Trichet said that. He said it is absurd for Greece to leave the Eurozone. No, it was absurd to tell in public that it would be absurd to let the Greeks go. You should have said, one never knows. That creates tensions in the market. That doesn't take away the uncertainty in the market. And that would, of course, given an incentive to the Greeks in order to demonstrate in the streets, do their homework very quickly. But the German policy, Frau Merkel, and particularly the Minister of Finance, Mr. Schäuble, who doesn't understand a lot about markets, said, we defend Greek whatsoever. And they thought honestly that the story would be over in 1 or 2 years. The first rescue plan was a plan envisaging return to the markets in 2014, which was illusionary right from the beginning, because the burden of debt of Greece, which is a country with the economic power of a little region in Germany, is simply unsustainable. So they made very dramatic misjudgments. Now they are the victims of their own misjudgments. And they have to go on, and to tell you the truth, either the Germans will go into the road in the street and protest massively against bailout policy and against Trichet's ECB supporting our legal action, or these herding panic politicians cannot be hindered to go on because, you know, a herd of sheep, once in action, once in movement, cannot be stopped unless there's a precipice.
Yeah. The German government, though, portrays the continued participation in the Eurozone as beneficial to Germany and the German people. You don't agree with that?
Well, this is an argument which is put forward by all those who have not a foggy notion of the capacity of an exporting nation like Germany. Germany had been an exporting nation before the Eurozone. Of course, in these periods we had all that, the exchange rate mechanism. Well, you know that lira and the French franc had been devaluated continuously, so there was a monetary problem. Monetary unification was on the agenda, but this did not hinder the German economy to grow. And this did certainly not hinder the German citizens to have a growing purchase power. And that didn't hinder the German economy to digest revaluations of the Deutschmark by making an increasing effort to rationalize and to be competitive. So the revaluations of the Deutschmark, we had of them quite a number, have helped the German economy. So if you take a close look at the growth rates within the more than 10 years of Eurozone, you see that Germany is lagging far behind. Germany had at the very beginning very difficult years. Germany did its homework, increased competitiveness, and today gets the benefits of that. This is not due to the automatic effect of the Eurozone. This is gossip. This is unscientific gossip repeated by some journalists and some politicians, mainly in France. The French have always said, well, the euro cannot fail because it's a French product, it's a French architecture. And secondly, it cannot fail because Germany cannot let the euro go down. Germany has profited very much from the euro. So this is very easy to refute. So if we reorganize Eurozone, which is under the aspects of optimization, a less suboptimal monetary or currency area, then we have to bring together, to converge those countries which are converging quite naturally. The Netherlands, Finland, Austria, and Germany, of course. That is to say, the countries of the old Eurozone, of the old Deutschmark zone. And then we can talk to Denmark, we can talk to Sweden, countries which have so far refrained from entering the Eurozone because they are frightened to lose their monetary sovereignty. And they didn't know, well, what is going to be the outcome of that. And they were quite right in taking let's say, a little distant and reserved attitude. So I'm in favor of orderly reshaping of the Eurozone and orderly liquidation of what is currently the Eurozone. And if then France thinks that the Euro as a French invention should remain, well, let them hit the Eurozone with all these Mediterranean countries which are extremely greedy for further subsidies. That will not be easily possible. We can, within a reorganized Eurozone, afford to pay for one Mediterranean country, yeah, but not for more. The Mediterranean club with an extreme Greece and with countries as condemned to incompetitiveness like Portugal, this is not a sustainable situation.
I want to ask you a question about that, but before I do, I just want to go back to a point that you made, that I'm very glad you made it, because there's this thinking these days that in order to be competitive in the export industry, you have to continue devaluing your currency. And if anyone looks at the history of Germany from under the Deutschmark, you can see that instead of devaluing the currency was constantly revalued. The export industry adjusted, to those circumstances, but becoming more efficient, adapting new technology, etc. And that actually Germany prospered from a strong currency. That the strong currency, in a way, even helped the exports in that sense by forcing the export industry to become more efficient. So it's a complete fallacy to think that you can improve your export industry by devaluing your currency.
You can buy some time by devaluating for your currency. You can.
It's a short-term gain versus the long-term benefit.
You can catch up more easily if you are a producer of consumer products, because consumer products are sold by the parameter of price. But Germany has never been very strongly exporting simple consumer products or commodities. If the German machine tool industry is so successful, it's because of the quality of its products.
Yeah, understood.
And the exquisite reliability of the service. Our clients buy German products because they want the quality of these products, and the quality of these products is not totally independent from the price, but is less dependent on the price than consumer products. So the French propaganda saying the German growth of today is owed to the Europe is simply nonsense.
There's a paralysis seems to be occurring. Government is moving down this one road. It's not solving any problems. How do you see this unraveling or unfolding, in the months ahead?
Well, apparently the parliamentary vote seems to be a victory for Frau Merkel. It is more or less an act of survival. Let us now see how quickly the beefed up European Financial Stability Facility will be beefed up again. Tools are going to be enlarged with leveraged money being put in. Claims in Brussels for a further enlargement wouldn't surprise me. Some people say they should have a banking license. All this means that you continue the politics of debts. This is the economy of disaster. So
I like that phrase, the politics of debt. Because that's exactly what they're doing. They're just adding more debt to it.
And that would not solve the problems of competitiveness and the lack of homogeneity of the Eurozone. So politicians in democracy always buy time to the detriment of the budget and to the detriment of the taxpayer. it remains to be seen if they bought enough time to survive, because sooner or later that edifice of debt will come tumbling down, and then we have a big bang, a crash, and that will be very difficult. That's why I argue very much in favor, I advocate a policy of pragmatic realism, saying what is over is over. The euro was worth an experiment, but now we have to draw conclusions from what is happening. The French say the euro is a political project. As it is a political project, we have to defend it. That has no price. This is a typical French way of thinking. There is no project without price. And if the costs generated by that project generate a situation where damage is beyond repair, you have to stop the experiment. Such as de Gaulle, a wise man, said, Algeria, French Algeria is over. Let's stop it. You need in that situation taboo breakers. And this is a matter of leadership. We have a leadership problem, not only in Germany, where somebody standing up and say it's over, but in Europe. Because take a look at the situation. The Germans spent an awful lot of money to make Greece survive. And the Greek say, well, this is an opportunity for Germany to make a lot of money. You can imagine the number of discussions I have in TV with Greek professors seriously putting forward theses of that kind. So there will be a certain clash anyway. If you can't avoid clash, if you can't avoid a discussion about who's the scapegoat, well, you have to advance things, and come to a conflictual situation as soon as possible, because otherwise you wait another year and another year, and in the meantime you have such a burden of debt that even Germany will lose its creditworthiness. And this is something we should be very careful about.
Let me ask you one last question, and it's basically, I want to get into the role of gold. You know, one of the things that's clear from monetary history is when you politicize the monetary process, the currency tends to be overissued and ultimately is destroyed. And in my knowledge, I think the only currency that wasn't directly tied to gold and did very well was the Bundesbank, because it was completely outside of the political process. And of course, one of the benefits of the classical gold standard was that because the amount of gold was limited, it put control on how much currency could be issued and provided a form of discipline. Do you think there is a role for gold to play in a revised monetary union?
Well, first of all, I think that the Bundesbank would do very well in claiming back the gold reserves which Germany owns, because Bundesbank doesn't have an immediate influence or control on gold reserves. And one of the aspects of the European Monetary Union, which is I have very much deplored, is the de facto expropriation of Germany as far as gold reserves are concerned.
Okay, understood. Well, Markus Kerber, this was a real pleasure. I very much enjoyed it. I'm sure the people, and there'll be thousands of people viewing this video around the world, I'm sure they will find this very, very informative. Thank you for taking the time to meet with me today.
Thank you. Pleasure.